Okay, let's jump right into crude oil for an update now that the markets have closed. Congratulations to all of you, all of us inside of our trading club. If you saw the video from Sunday, okay, we began to become buyers in the crude oil market because structure was yelling at least a short term retracement to the top side. So, congratulations to all of our buyers. Now, there is some interesting news that just came out through the wire. Tomorrow is Wednesday. Tomorrow will be crude oil inventories day. And so, according to this report, that just came out, U.S. crude oil inventories fall more than expected. U.S. crude oil inventories fell by 4.6 million barrels for the week ending March 21st, 2025, following a 4.6 million barrel increase the previous week, according to the American Petroleum Institute. The decline came after two consecutive weeks of inventory builds, surpassing market expectations of a 2.5 million barrel decrease. So, what does that mean? That means that we could be in store for crude oil to continue its upward trajectory. On Sunday, when I put that video, are we going back to 60? Well, we came very, very close to 60 so far this week. We have basically topped out the week so far at 69.67. Thanks to all of you who sent me private messages, both in the YouTube community and through some email saying, hey, thank you for your consistent calls on crude oil. So now what we have to look for is this candle here that just closed on the 8 hour for the Tuesday afternoon call. Uh, I did expect price to jump a little bit lower, possibly, but if we look at this Fibonacci level, okay, that we just hit here now, from when this price up to here, we did come down to that 61.8 Fibonacci area. If you use the beginning of this upward trajectory candle, then we came somewhere between the 50 and the 61. But I usually use the last bearish candle as a point of reference. And so we did bounce off that 61.8. So if you are trading London session tonight, okay, so going into the next 12 hours, I'm going to give you what you should be looking for with regards to crude oil. And again, keep in mind that tomorrow, I believe it's at 10:30 a.m. Eastern Standard Time, there will be a crude oil inventories. So we'll see the markets move tonight, and then tomorrow prior to 10:30, it will stall out, and then the news will hit. So don't get caught on the wrong side of the news. The best thing that you could do is not trade the news. So we ended the daily candle as this doji candle right in here. Okay. If we take a look at the inverted Fibonacci from this wick down to this lower wick, we can see here, and this is where we began selling crude oil up at this 88.6 area for those folks that wanted to grab a quick retracement down. Okay. I still believe that we're probably going to retrace down a little bit, maybe in the pre-London sessions or during London. So that way, folks who want to buy crude oil for the news, if the news is that we have a lack of petroleum to spike up, then we could possibly see this type of move, right? Come down here during London, and then eventually do we go higher with the news if the news is a bullish news day on the inventories report. So let's go ahead and break this down here. But we're going to break this down on a 1 hour level to give you what I believe you should be looking for if you are going to scalp crude oil. So I'm going to give you these levels. All of you put down in that last video that you wanted more levels. So I'm going to give you some intraday levels because, again, this is where you should be trading with regards to the next few hours and heading into the London session. Okay, so these are basically going to be the levels that you should be focusing on. We do see a little unmet liquidity up in here. So again, I would not trade at market open at 6 o'clock. I would wait until pre-London to see where price is at. And again, I think if you see, price hovering up around these levels, I think here you could possibly take a short back down. Okay. Now it's going to be interesting to see if they spike back up here on the 1 hour. Okay. Again, keep in mind that we are in this nice Fibonacci area right in here. If they do grab that liquidity that's sitting there. So if you're going to take what would look to be like this possibility third leg of this M pattern, then you want to set yourself up for something like this with regards to taking a short. It will be a very tight, okay, window here. So you want to go above the yellow plus your spread, okay, at a few pips. And the goal is that you can take it all the way back down to this zero line here. Okay, so this would be the London play if price is peaking around that area. Now, again, barring any, crazy fundamental news that could come out over the next, 1 to 6 hours, if this is strictly off technicals, this is where we would look for the next short squeeze, okay, on here. And keep in mind, as we talk about in our trading club all the time, we always want to protect after 20 points, which means a 20-cent difference in price. Okay, you always want to protect, cash out, scalp, whatever you decide to do, and then you can go in 2 positions, okay, with the same risk. But of course, you want to go ahead and take some profits off the table with this 20 and then hopefully leave a runner. So I do believe we're going to head right back down, whether it's pre-London or during London. One more time, I think they'll have the opportunity to grab price a little bit lower if they are going to do a big bullish move for the news. Okay, so we can kind of see that we are kind of riding this 1 hour trend line right here. Now, if something crazy happens and we break below this level, then of course the next target to the downside is going to be here. But before we get there, we have to trade what we see. And again, the question is going to be, if you come back to trade London and they have not made a higher high, because if you look here, okay, we are still riding these high, low, high, low, high, low, high, low. If they fail to make a higher high, then they're going to dump one more time. Okay. If they shoot through the 100% Fibonacci line here, okay, then the next shorting opportunity would happen up here at the extension. Okay. You would go ahead and take a short at the extension here. Let me move this over here. Your risk would be there. And then you would take this down, trying to take a nice push as far down as you can. But the same rule applies. You protect after 20. Okay. Don't let a winner turn into a loser. So these are the 2 projections for London session. Okay. Only looking for a sell opportunity only because if they are going to push price down first to get a better price and then push up during U.S. session inventories tomorrow morning, I would think they're going to dump price a little bit first prior to that happen. Okay. So I hope you got some value on this quick video recap. And again, if you are brand new here, let me go ahead and put this on here because I didn't even put the overlay. Anyways, if you are brand new here, you definitely want to go up and subscribe and hit the notifications bell so you don't miss out on these analysis on natural gas and crude oil. And if you're new to trading or you've got some experience with trading and you want to come into a healthy, positive community group, then head over to my website. Come on in and pick a plan for you, $1 a day or so. So that way you can just come in and learn and grow with over 300 international traders and really build family and build community. Somebody put a super nice positive remark in the group today. Didn't even want to cut and paste it for this video because I think, at the end of the day, God will light you up as long as you give him glory. So I don't self-promote. I just do my thing and I'm just a messenger. And listen, if you got some value on this video, head over and bing, the video because more people have the potential to see this and be positively impacted with the more likes that you do on the video. That's the game we have to play with the algorithms. Okay. Thanks for watching, and I'll see you on the next video.